Home Depot out with earnings this morning, beating on both the bottom and the top lines. For the first time in 2 years, Home Depot actually saw positive same-store sales in a quarter. Saw those comp store sales up 0.8%. Expectations had been for a drop of 1.7%. For more on this right now, we want to bring in Brian Nagel. He is Oppenheimer's senior equity research analyst. And Brian, there's a lot to go through here. First of all, though, let's just start with the earnings per share for the quarter. The company reported, I'd go with the adjusted number of $3.13 versus the estimate that's anywhere from $3.02 to $3.01 to $3.04, depending on which service you're looking at. How would you look at these numbers? Were they better than expected, and what should we match them up against for an apples-to-apples comparison?
Yeah, good morning, Becky. So I agree with you. I think the 313 is the right EPS number. That takes out some one-time items, and that beat the consensus. The consensus forecast was around $3. Okay, so you had a nice, a solid, if you will, earnings beat. And like you mentioned at your opening, a key positive here, and again, there's lots to talk about Home Depot, but look at the first key positive is sales did top expectations. And like you said, this is the first time we've seen a positive comp at Home Depot in a long while. So in and of itself, that is a positive. Now, I very much, you tell me what you want to talk about, but I very much question the sustainability, because I think the really erratic weather we had across the United States over the past, several weeks, few months probably helped. But nonetheless, we did see a positive comp.
Okay, so let's run through some of those positive comps. The company will tell you, the CFO told me that they were up in 15 out of 19 geographical regions. They had more than half of their product lines show growth. They saw customers coming back and sales exceeding their expectations. They were encouraged by the improved results. They saw greater engagement in home improvement. The downside is they're still not seeing the big renovations that they had seen before. They think that is tied to home sales. But you bring up that point about the hurricanes and other weather they saw during the season. The CFO told me that Hurricane Helene and Milton definitely created some demand that was there. They say that that was incremental. They think that it was about 0.6% of the comps, of that comps improvement. And you're still talking about comps up 0.8% versus the drop of 1.7% that had been estimated. So I think they think it was more than just weather that was coming back through. Does that change your perspective on anything?
No, look, that's positive. That's positive. What I would say, and again, we're going to have the conference call here at at 9 o'clock Eastern, so we'll get more color on this. And this is going to be a big topic of conversation. But look, the way I would, with the several years game there, so look, weather helped, but there was probably something else. And I think what we're seeing is, again, looking across retail, I follow a number of retail-type companies. The holiday was good. And Home Depot, and this is true for Lowe's, which we'll get tomorrow, has reconfigured its business model. It's more of a holiday play at this point. They do a better job of merchandising for the holiday. So I think we saw some of that demand. Where my concern, and one of the key reasons I'm not recommending Home Depot now, despite how much, frankly, I love this company, because I think it's an extraordinarily well-run company. But my concern is housing, and you mentioned that too. We have this stagnant U.S. housing market. Okay, and I don't see that unstagnating until we get interest rates significantly lower. And I think that will be a significant headwind for Home Depot sales for a while.
Yeah, and I'll tell you what, the company would agree with you on that. The CFO says that they're not expecting rates to go down this year, and that is, they're not expecting the housing market to improve and seeing more turnover than we've seen to this point. They do say, though, that they think they're running the business as well as they ever have. He said that inventory's in stock, their staffing's improving, their delivery is all getting better every week. Also says that some of the investments they've made in things like delivery experience, speed, and reliability, they think is paying off. They think that for appliances and power tools, it's paying off there, and think that they're stealing market share there. Also with drywall and concrete and things for the pro customer. So I just want to throw out everything I've heard and have you analyze and think through what that means for you.
Yeah, so look, I think this is what we see happening. U.S. retail has become an extraordinarily strong business, right? The strong get stronger through tough times. And that's exactly what's happening with Home Depot, and I give them a lot of credit there. They're dealing with an unfavorable macro environment. They've been dealing with this for a while. But like they said, like you repeated, they're getting stronger as this is happening. So when these headwinds shift to tailwinds, which inevitably will happen, it's just going to take time, Home Depot is going to emerge an even stronger company, better capable of capturing market share. My concern is this is going to take a while. Now, if we look at the guidance, again, they're telegraphing a positive comp here in 25, which again is encouraging. but another, and that needs to get some more explanation. There's some other conference call, but they're actually somewhat telegraphing more dampened profitability, a lower operating margin. So, I don't know if that's just the comp's not enough to lever the expenses. If there's some incremental investment, that's something else to consider here.
Okay, and their adjusted diluted earnings per share, they expect to be down about 2% from the $15.24 that they were looking at, that they earned, that, again, was better than expectations for this year. How does that match up with your expectations for next year?
Well, I'm going to say versus street expectations, that's, I don't want to say missed, it hasn't been reported, but they're essentially guiding below the street. Okay, so that would be a negative. Now, we've got to consider Home Depot's a smart company. Now, they attempt to guide numbers where they can beat them. It's obviously very early in 25. But if you look at the numbers right now, that initial earnings guidance for 25 is below consensus street forecasts.